What's up? What's up? What's up? Just give me a second. I'm just sharing the video. Go ahead and share this video to other members, your friends, family that's interested in the stock market. All right. I think I am good. Just waiting for more people to join. Waiting for more people to join. How are you guys doing today? Happy Juneteenth. Just waiting for more people to join. What up, Noble? What's going on, man? Just waiting for more people to join. Just waiting for more people to join. So happy Juneteenth. Happy Juneteenth. Happy Juneteenth. Happy Juneteenth. How are you guys doing today? So if you've never done an Ask the Trader, this is how it works. If you've never done an Ask the Trader, this is how it works. All right, so there's a comment section. So if you're watching this live on YouTube or LinkedIn or Facebook or Instagram, all you have to do is go into the comment section. Now, I see all the comments. So whatever platform you're on, anybody that's using YouTube, you guys are going to all see the same comments, but you're not going to see the comments from Facebook. So what I'm going to try to do is I'm going to try to show all the comments within the next 2 hours. And what I want you guys to do is I want you to take a stock, one stock that's at least $1 billion in market cap, because I can't show anything that's less than that. And I'm going to try to analyze it with my tools. All right. If you can, when you do ask me a question, and it doesn't have to be stock related, as long as it's dealing with stocks, options, futures, and crypto. It can be dealing with anything, your portfolio. Just make sure that you guys give me one stock. All right. One stock that's at least $1 billion in market cap. And you can put those questions in the comments, or you can ask any questions that you want. Now, there's going to be a lot of people on today, so try to keep your questions as short as possible. And again, I only want to see one stock. All right. Chances are we will see some of your other stocks, but we want to try to see a lot of different diversified stocks, right? We've been talking a lot about tech stocks and cryptos, cryptocurrency, but let's get a little bit diverse. I want to try to get to everybody's questions today. All right, so welcome to Ask the Trader. This will be recorded, so if you aren't able to make it, or if you have to run off, you will be able to see the recorded version if you go onto YouTube. But let me tell you a little bit about myself. My name is Joel Harrison. I am a full-time day trader. I'm an expert in stocks, options, futures, and cryptocurrency. I have over 15 years and over 30,000 hours of trading and investing experience. And anything that we talk about today are the opinions of Joel Harrison. Now, I will get started once I see somebody needs to give me, somebody needs to put in the comment section that you can hear me clearly. And if you can hear me clearly, then I will go ahead and start the presentation. All right. If you can hear me clearly, then I'll go ahead and start the presentation. All right. Cool. All right. Great. All right. So if you haven't used my app, I do have I'm sorry, if you haven't used my GPT, if you do have a subscription to Chat GPT, you can go to Explore GPTs, look up Ask Joel GPT, and my particular GPT is specialized in stock related questions. All right. I put a lot of the indicators that I use on a daily basis within that particular GPT. So when you ask a question that's referring to either a trade or an investment, my GPT will try to answer that question the way that I would answer that question. So if you haven't used the Ask Joel GPT, it's one of the best things that I think I've ever created. And I'm always trying to make it a little bit better than it is right now. So I do have an app, the What Would Joe Do app. It is free. You can download this particular app. It is free. If you do want to be part of the subscription service, there's one that's just for alerts for when I'm buying and selling stuff, and it is random. And then if you get the full service, you're going to get access to about 8 videos that involve stocks, options, futures, and cryptocurrency. And you'll get the alert system. So a lot of people love taking advantage of the ultimate member service. And then anytime I do any type of class anywhere, the ultimate members do get free reign to come in. All right. If you need videos, right? If you're low on cash and you're like, man, I really need to learn how to trade stocks, options, futures, or crypto, or learn the What Would Joel Do method, but I just don't have the capital to pay for a $10,000 or $15,000 class. That's why I created these particular videos. But you can go to my PayHip, which is payhip.com/What Would Joel Do. A lot of people don't know that I have a video library where you can learn any and everything in the market. All right. And I am a proven trader because I'm constantly showing receipts. You guys are going to see beautiful charts today, very beautiful charts. If you want your charts to look like mine, you can download the Thinkorswim chart setup video, and everything that we talk about, any indicator that I use today, you're going to be able to use it. You're going to be able to use it as well. All right, there are a couple of places where you can find me. You can find me on YouTube. A lot of people are watching me live on YouTube. You can also find me on Facebook, where I put that's where I'm usually during the day. Most people are on Twitter. Most people are in some of these Discord rooms. I'm on Facebook. So I'm usually in the insider trading room, probably watching TV. Usually when comments are coming in during the trading hours, you're probably going to get a really, really quick response from me. And I try to keep you guys up to date on whatever's happening in real time, what's going on, in the world, because it will affect your stock, especially if you're day trading. But these are a couple of my trading rooms: the Insider Trading Room, which is the largest, which actually has over 30,000 members. And then you have my Ninja Trading Room, which is a smaller room for anybody that has purchased any of my products. And if you wanted to do a consultation with me, who knew that you can talk to an actual day trader or swing trader, and you can ask me any questions you want, one-on-one. And a lot of people take advantage of this deal that I have for you guys, where you can come in, you can ask me anything about the market, and within that hour, if you want to learn options, if you want to learn stocks, crypto, within that 45-minute consultation, you can ask me any and everything about the market if there's availability for you to book. But you can go to calendly.com/What Would Joel Do, and that's where you'll find me. I've done thousands of consultations, and that's my gift to you guys. So, I hate doing that. It took me 9 minutes to do it this time. But investing and trading is easy, guys. You guys are making it so hard. Investing and trading is so easy. It's so easy. And I know I make a lot of people mad when I say this. I do. Because most people are struggling as traders. Most people are struggling as investors. And a lot of the reasons is you guys don't know what to look for. So that's why I help create this insider trading room. That's why I show you guys receipts constantly. That's why I'm constantly trying to create up-to-date videos so that you guys can stay in the know. And I try to make it affordable so that you guys can stay, you guys can keep up with the Joneses, keep up with the Harrisons. All right. So investing and trading is easy. So don't make it hard. We're going to use the What Would Joel Do method. The What Would Joel Do method is simply a method where you ask yourself these questions before you hit the buy and the sell button. When you guys come to me and you guys do consultations, most of the time you can only answer one or two of these questions, right? If you're able to answer all of these questions, trading and investing becomes very easy, because you now have decided to go at it like a business, right? If I was going to create a business, I'm going to have to be able to answer all of these particular questions. You guys treat if you treat the stock market like a casino, it's going to act like a casino, right? But if you treat it like a business, you're going to be able to be profitable over and over again, year after year, just like me and my family. All right. So we're going to use the what would Joel do method. So happy Juneteenth. All right. Hopefully, we have a lot of people that are on today because you're not working. And I know sometimes it seems like work when you're investing and trading in the stock market, but it's fun to me, right? I love to make money. I love to find stocks that I can invest in and I can make 10x on, 20x on. But happy Juneteenth. We're celebrating. Well, let me pull up the definition of Juneteenth, because there's a lot of people that are on today that actually don't know what Juneteenth is about. So why is Juneteenth celebrated in the USA? I asked my GPT this particular question. And it spat out that Juneteenth is celebrated in the United States to commemorate the end of slavery. Specifically, it marks June 19th, 1865, the day when Union General Gordon Granger arrived in Galveston, Texas, and announced the freedom of all enslaved people in the state. More than two, now this is what's crazy. It happened 2 years after President Abraham Lincoln's Emancipation Proclamation had gone into effect on January 1st, 1863. A lot of people ask me who my favorite president of all time was, and of course he was a Republican, but it was Abraham Lincoln. But the big reason why Abraham Lincoln is one of my favorite president is, yes, he helped create. Well, he put out the Emancipation Proclamation, but he's also born on February 12th, which is the same day that I was born, right? So I love Abraham Lincoln. But there are key points. The Emancipation Proclamation 1863 declared enslaved people in Confederate states free, but it wasn't enforced in many areas until Union troops arrived. And then in June 19th, 1865, the announcement was made in Texas, representing the last major holdout of slavery in the U.S., making it a symbolic end to slavery nationwide. So, I tell people all the time, and this is a lot of you guys are going to get shocked when you hear this, but I'm black. All right. I'm black. I'm a black male. All right. That's in finance, that loves the golf. Right. So, I like to embrace my blackness. But what I hate to see people do is when they come in the room and they don't have empathy for a certain set of people and a certain set of people, meaning my people, and having some empathy to what our ancestors had to go through and what we're experiencing today. It kind of really makes me angry, because the worst thing, the one thing I hate hearing people come in and say is, slavery was way back then, you need to get over it, and blase, this, that, and the other, right? And it really hurts me to my heart when I see how evil some people can be with no empathy towards, what happened in the past. And I understand, every day you don't want to hear that your ancestors enslaved different people, because it makes you feel like you're bad, right? But you have to acknowledge it, right? If you acknowledge it and you have empathy for it, then it's going to make you a better person, and I promise you it's going to make you a better trader and investor, because this room right here that's run by males, black males, is the best trading room I feel on the planet, right? We outwit everybody that's on Wall Street. For the past 15 years, we have been correct in calling the market every single solitary year. And we've created a lot of millionaires from being in this particular room. So I feel honored, being able to do that. And that wasn't just for black people. That was for anyone that was in the room. I do consultations with every race, color, nationality that's out there. All right. But I am black, and I want you guys to understand that. All right. Howard University, I was born in Decatur, Georgia, Decatur, where it's greater. Went to Howard University, and that's not I don't want to pick at anybody that didn't go to a HBCU. The only HBCU that I'll pick at is probably Hampton, because they actually think that they're the real HU. All right. But other than that, I wanted to let you guys know that I was black, because, a lot of people didn't know. They was like, Joel might be Dominican, or he might be, which is also black. But anyway, so we're gonna use the what would Joe do method. This is my symbol. This is my brand. And what a lot of you guys don't know is that there's a bull and there's a bear on my shoulder. So sometimes I'm a bull, sometimes I'm a bear, right? I see bulls and bears arguing in the room all the time, and I'm a bull and a bear. The problem is bulls can be wrong, bulls can be right, bears can be wrong, bears can be right. And if you have so much ego that you only want to be on one side all the time, that's probably why you're not making money in the market. Early in the year, you know, the bears were killing the market. And then in 30 days, in 30 days, the market dropped. We had one of the biggest drops in history, right? The Bears was like, all right, we won, blase, blase. But then 30 days later, we had one of the biggest moves to the upside in the market. So the Bulls got wiped away in the beginning. The Bears got wiped away in the beginning. But you know who was left standing? Someone like me that's neutral, that understands the market, right? I can be a bull and I can be a bear, but I know when to be a bull and I know when to be a bear. And that's why using the what would Joe do method, using the technical side of the market and blending it with the fundamental side is going to help you, make money in this particular game. But the one question you guys need to start asking yourself when you're buying, well, when you're coming into the market is, are you investing or are you trading? My sons just recently. Now I have one that's a freshman in college, and I have one that's a sophomore. They're 18 months apart. I never taught them trading until they were in college, right? Until they were of age. Because, in my opinion, not even in my opinion, it's just statistically, wealth is built from investing. It's not built from trading. Wealth is built from investing, not trading. Trading is a skill set that allows you to make money so that you can invest it back into yourself. And a lot of you guys have it backwards. Trading can be fun. Trading can make you a lot of money really fast, but it's also I would say it's just the easy way out that people are trying to use. It's the lazy route, in my opinion. Now, learning the skill set is great. The investing side is the hard part. How can I buy something and hold it for 5, 10, 15 years? That's the hard part, especially when life be lifing, right? And you need money to do certain things. So what a lot of people do is they come to me and they say, Joel, how are you able to handle real life situations and still be able to have this money sitting over here when you know somebody needs this money, right? And there are ways to do it. So that's why people come to me, so we can set up your accounts. We can have accountability partners, right? We have financial wealth advisors that help us in this particular way so that we won't spend all of our wealth, in the next 20 or 30 years, because we always put everything off. Oh, I'll do it next year, or I'll do it in 2 years, or I'll do it in 3 years. I still have a lot of time. And then next thing you know, you're 50, 60, 70, or 80 years old. All right. And we're not trying to get to that particular point. We're trying to start today. All right. So again, I want you guys to see this all the time because this is very important. Investing and trading is easy. You guys are making it so hard for yourself. All right. So in my opinion, when you break things down in its most simplistic way, right, you're going to be able to see the market for what it is. All right. I love coming into the room and arguing and venting and getting angry when people like Trump makes my stocks go down. Look, I was angry and mad when Biden was making my stocks go down, or when, Obama was making my stocks go up or down, right? So I'm a human, so I love to do that, but emotionally, that shouldn't stop me from making money in this particular market. All right. I want you guys to start implementing the 90-10 rule because a lot of you guys are not doing it. All right. The 90-10 rule is going to protect you and it's going to keep you in this game forever. All right. The 90-10 rule means that 90% of whatever you have, I don't like when you guys come to me and you say, Joel, I got $5,000. What can I do with this? I'm like, well, put 4,000 of it into an investment account or your kids' account, and we're gonna trade with this 1,000. We're gonna take this 1,000 to 1,000,000. And you're like, what? And I'm like, yeah, I don't care if it's $100. We're gonna take this $100 to 1,000,000. and I'm going to show you guys how to do it. But it starts with protecting yourself, because you can't go out there and I wouldn't say gamble, but you can't make the moves that you want if you don't have any type of security. The 90% is going to give you that security that you need. The 10% is going to give you that aggressive, that aggressive investing or trading behavior that you need if you want to capitalize on something like an Nvidia or a Bitcoin or any of these particular stocks that I've made over, 1,000% in. And it's so easy for you guys to do it too. One of my kids for the first time just got 1,000% return. He's only 18 years old, and he has a percent return that some of you guys have never had in your whole life. And my oldest son and my youngest son, he got that 1,000% return in Nvidia. My oldest son, I think he's at like 600% in Spotify. Right. So all they're doing is, they're buying stocks every single month, and they're letting those accounts grow. But I didn't start teaching them trading until this summer. All right. And I want you guys to do the same thing. Use the 90-10 rule. All right. Now, receipts matter. I don't give a dang what anybody says. Receipts matter. And I've always had a theory that, people that have problems with receipts probably can't create receipts. That's why they have a problem with it, right? My whole life, everything that I've ever done, I always said, you know what? These people are just mad over here because, they can't do what I'm doing here, whether it's swimming. Oh, I get all this hate for swimming, or if it's if it's education wise, you know what I'm saying? They're just like, oh, I can't do that, so I'm going to get angry at this guy because he can. And I'm like, when did accomplishments become a negative? Oh, you're just bragging. I'm like, I have a consultation business. I'm trying to sell people videos so that they can create wealth and investment in their lives. I have to be able to show them how I did it, right? Otherwise, it'll be the blind leading the blind. And I see a lot of you guys doing it. In this day and age, you guys are so afraid to vet the people that you're working with. Look, there's somebody working on our house right now. Very good builder. This builder would have never got the job if I didn't say, hey, let's go look at some projects that you've done in the past. You know, at first they get offended, like, what? I only work on referral. I'm like, nah, I want some ideas. I kind of want to see what you're talking about, right? So, we drive by, look at a couple of properties, and I'm like, oh my God, like this dude is like the man. So yeah, all right, we'll give you these funds so that you can renovate part of our house. Guys, there's nothing wrong with vetting people, but just going off of the fact that they have a YouTube page, or they went to school here or went to school there. Oh, Joel went to Howard, so I'm just going to believe him. I don't want y'all to believe me because I went to Howard University, right? I want you to decide that you want to go with my particular programs because you've seen me make calls in the market, and you've seen me make money in the market, and you have people over here that said, dude, Joel is legit. He's a real guru. This joker has been calling the bottoms for the past 10 years before they do it on TV, right? So receipts matter, right? And I'm going to keep saying that over and over and over again because it's going to help you guys out. You don't have to take any of my classes, but I hate doing consultations after the fact. Y'all go out, do classes with other people, and then you come to me and say, all right, Joel, I'm ready to get a consultation now after you've lost thousands of dollars. I don't want you guys to go that route. My videos and my consultations are low enough where you can come to me first, and then you can branch out there because at least you're going to get the fundamentals. But even on this call right here, where I said it's been a great 2-year run. This was in December of 2024, before President Trump came into office. I said, look, guys, I'm selling a lot of my stock. But I'm not gonna just stay out of the market. I'm gonna wait 100 days, because they always talk about the 100 days when a president comes into office. Wait the first 100 days just to see what policies are going to be in place. And sure enough, everybody wanted to jump in the market immediately. I was taking money out of the market. And I said, all right, I'm going to wait January, February, March, April. If I start seeing that volatility index start to spike above 30 or 40, I'm going to start buying the market. Sure enough, it was a great call that I don't really get credit for. And I'm not here to get credit, right? But the market exploded in value, and a lot of people can't understand why it happened. And a lot of people come in the room talking about, oh, that's luck. And I'm like, it's not luck if you've done it year after year after year after year after year after year after year. And I got receipts to prove it. All right. So, if you had jumped into the market 100 days later, you would have made a killing in the last 60 days. Just off of the volatility and just by coming into the room, you didn't even have to buy a class from me, just watching these YouTube videos that I put out there for free. So why do you do it, Joel? Because when you guys make money, I get that energy. I get all that great energy from you guys making money. Okay. If you're following my lead, because I'm buying the market as well. This is the last year. This is the last 3 years. These are my portfolios, right? My portfolios are sitting at all-time highs. That's how we're able to renovate a property or have 2 kids that are in college or be able to go this way and that way. And it's not about bragging. It's about, guys, it don't matter who's in office. Y'all need to just you could be angry about policies, but when it comes to money, which is why I really love watching CNBC. When you watch CNBC, everybody that's on there tries to remain as neutral as possible. When I'm in the insider trading room, I've been one way and other ways, right? But I still try to remain neutral because I'm trying to make Republicans money. I'm trying to make, Democrats money, independents money, racist folks money, angry folks money, nice people money. I'm trying to make everybody money, right? Because in my opinion, that's what my job is. And people do have the ability to change and become better people. I wasn't a saint back in the day, but every single day I try to be a better person, right? So I try to help everybody. But again, receipts. The receipts are important. These are my overall portfolios. My portfolios are sitting at all-time highs. Why? Because I preach what I don't know what's going on with my brain today. Must be all this coffee. but yeah, anything that I talk about, I'm going to lead by example. I practice what I preach. Okay. So this is my 1 year, my 3-year receipts. Now, one thing that a lot of you guys are not taking advantage of, and I'm going to get to you guys' stocks. This is legit. Y'all know for the first 30 minutes, and it's what, 10:29? I have to do this. And y'all see how on point I am? This is the last slide. A stock mortgage is something that I want a lot of you guys to get into. Now, everybody knows about dollar cost averaging. I get it. Joe, that ain't nothing but dollar cost averaging that you trying to make your own. A stock mortgage, which I tried to patent this term, is when you're using a dollar cost average strategy, which is buying something over and over again, but you have a goal for it, right? So this is a stock mortgage for Christmas. So every January, or I just started it this January and I did it the January before. A lot of you guys struggle when it comes to Christmas, right? And a lot of the reason why is because you're not setting aside money, monthly, so that you're able to buy gifts or whatever you want to do at Christmas time. Now I know $6,000 is a lot of money for a lot of you guys for Christmas. So, but this is just how much money I spend at Christmas. All right. So I don't like where I have to make a $6,000 payments at that particular time, because that's gonna hurt even me. So what I like to do is I like to buy it slow, but I like to put the least amount of money in and try to maximize those funds so that, if I put 3,000 in and then it grows to 6,000 or 7,000, right, I have a very good Christmas, right? So this stock mortgage was in cryptocurrency, right? So what the goal is, every single month, I wanted to put $100 in. I told everybody to start off with $100 every month. On the first of every month, just buy some type of crypto, Bitcoin, Ethereum, Ripple, Solana, what have you. So by Christmas time, you'll have about $1,000, right? And then you don't have to worry about your credit cards or this, that, and the other. And you have $1,000 that you can spend on your own. Maybe it's for flights, right? To get your kids home, right? And paying that $1,000 outright might hurt you, but if you put $100 in every single month, it helps with the blow. So I put $100 in every week. So my goal was to at least have, since there's 52 weeks in a year, 52 times 100 is 5,200 bucks. I'm gonna spend about $5,000 for Christmas, right? So I was putting my money into the market, and then all of a sudden it shot up in price, and I'm like, dang, it's already June, guys, and I don't even have to contribute to this stock mortgage anymore if I don't want to. I can sell it right now, and I have all of my Christmas money, ready. So some people always say, well, Joe, what if I was putting $100 in, and I've seen how crypto works, and now all the crypto drops in price, and now that $1,000 is only worth $200. Now I'm not gonna have that big of a Christmas. And I'm like, well, if the $1,000 drops to 200, you're right. It might be a small, it might be we might not be buying as many gifts as we can this particular year. But I guarantee you that $200, even though you was putting $100 in every month and is now worth $200 at Christmas, that's $200 more than you would have had to start when Christmas started in the first place. So it's always a win-win situation, because you know that you're going to have some type of funds in the end. More than likely, though, guys, it's going to be higher than the amount of money that you put in. I've been doing a stock mortgage year to year for the past 5 years. I did one with Facebook and Nvidia one year for the room. I did crypto last year. I did crypto this year. Every single solitary year, there's profit at the end. And if you're really, really good, tax wise, what a lot of people will do is, even though this is at 6,200 or $7,000, right? They won't sell it until, so what they'll do is they'll go buy all their gifts on their credit cards up to whatever amount this is, right? And then they'll wait until the calendar year is over with. And then in January or February, they'll sell their crypto for their profits. And now they don't have to pay taxes on, well, they have to pay taxes on that crypto, but it won't be for the year prior. It'll be for the year that they sell it in. So a lot of people go that particular route as well. So there's so many ways that you can go about doing it. I know it's what, June now. It's never too late to start, but I want you guys to start doing it, and then I want you guys to start coming in the room talking about, what type of stock mortgage that you have. Some people create stock mortgages for a down payment on a house, or they might do a stock mortgage for a down payment on a car. Some people do a stock mortgage for a vacation. I remember a couple of people coming to me telling me that they wanted to, buy some investment properties, right? But they didn't have the $20,000 at that particular time. And I was like, hey, find, especially when the volatility index is down, start investing $1,000 here and there in some of these particular companies. And then maybe 18 months later, you'll have those funds that you need to put into that particular property. So this is my stock mortgage. I just wanted to share it with you because that's what I do. I share with you guys what I'm actually doing in real life, so that you guys can take advantage of it. All right. So let's get to you guys' stocks. Let's get to you guys' stocks. So again, Noble is on. Noble said, "What's up, cuz?" I know a lot of you guys didn't know that we were cousins, but we are couzos. All right, and we're both Aquarians, right? So that's kind of wild, right? So you get the best of both worlds. All right, we got Sean Hunter. He said, "You are being heard clearly." Sean Hunter. Now, Sean Hunter has helped me. Now, as old as I am as a trader, it doesn't mean that an old dog can't learn new tricks. And Sean Hunter has introduced a couple of indicators to me that has me thinking about maybe changing a couple of things. He also put me on to the Heikenaishi candles, which I appreciate. Joanna said, "Good morning, Joel. Are you still bullish on Palantir long term?" All right, cool. First stock question. So let's get to the charts. And before we get to Palantir, though, let's talk about the S&P 500 real quick. All right, so the S&P 500, guys, is the overall economy. I want you guys to see with your own eyes what you missed out on in the market. Now, what you're looking at on this particular chart is a 200-week moving chart. Now, everybody knows when you look at my charts, I like to color code everything. If you see a solid yellow line, guys, that's for investing. That's a week chart. You're looking at a week chart. If you see a blue line on my chart, then you're looking at the 200-day moving average. So no matter what video you go to for the past 10, 15 years, if it's a blue line, more than likely it's the 200-day moving average. You can use it for investing and trading. It's kind of like that universal chart where you can speak to everybody. But then you have the week chart, which is a yellow line, and then you have the month chart, which is for super duper investing, like 5, 6, 7 years, and it's going to be green. We rarely look at this one unless I really want to look and see what's going on with the chart, but more than likely you guys are going to see me using this one, the week chart, or using the day chart. Now, this is the S&P 500. So this is the economy. This is the 500 largest companies on the planet. Well, the 500 largest companies on the planet are sitting at, well, about 1% away from the highest price the stock market has been ever. And a lot of you guys are still out of the market and afraid of the market, and you missed the market this whole freaking time. You got a chance to buy the market when the market was down 20%, and we were sitting down here at the 20-week moving average. Now, when we came down here, I did a video, I did post, and I said this, and I pissed a lot of people off. I said, guys and gals, this is how it feels to buy low. A lot of you guys were like, oh, I don't know, Joel, the market's going lower. And then I made a comment that pissed a lot of people off. And I said, the reason why it feels uncomfortable to you guys is because you've never bought at the low. So you don't know how it feels. I know how it feels because I've called the last 5 or 10 lows. This is how it feels. It feels awful. It feels like the world's coming to an end. It feels like nobody's going to invest in the market. I always take in that feeling because the very first time it happened to me, I couldn't sleep at night. My stomach was hurting. I couldn't understand, but I went out on faith and I was using my strategy and I said, I have to buy. And sure enough, 30 or 60 days later, the market was up. And then I felt a lot better. And I was like, wow, I like this feeling more than I did then. Then the second time it happened, my stomach didn't hurt as much, but I was like, what if this is that one time it just never comes back? And then sure enough, the market rose again. And then it rose again. And then it rose again. So now when the market is low, I don't even get stomach aches anymore. I used to get ulcers. I used to have to take Pepto-Bismol when all this stuff happens. And I'm probably the healthiest I've ever been right now because I started to understand this is what happens in the market. This is how the 10% or the 1% wins. They buy when everybody else is crying because the market is rigged to go up in value. There are going to be times in the market where it falls and you feel it falling and you know and you understand why it's falling like it did in the 2008-2009 financial crisis. We all knew that was a terrible time because everybody was losing their jobs. The banks were freezing. Like it didn't take a rocket scientist to understand that the world was in trouble, right? The pandemic slightly gave you that issue until the governments across the world came together and said, we're going to print money and throw all that money at the market, which is funny to me because everybody blames either Trump or Biden for all of this inflation that happened. But common sense should tell you when the whole world, every government on this planet prints money so that the people the people in those countries can eat and stay alive, that's going to cause inflation. And that's why we have inflation, guys, because there was a pandemic in 2020. But you guys are so racist and so hateful, you guys can't even see it, with your own eyes. Like, guys, this is the problem. This is how you fix it. But when you don't understand things and you just want to blame things on people so much, it's hard for you to make money because you want to blame this person for everything, and that ain't the reason why the market is doing what it's doing. All right. So you guys got to get over that. There are different policies that are in place that are going to affect us, that are going to hurt us. I get that. I'm in business. All right. But you guys got to start focusing on the fundamentals of why things are going up and why things are going down and why things are where they are right now. When the market got pushed down the first time, it wasn't because all of these companies were not making money. Right. The reason why the market fell in the first place was because one individual came into the market and decided that he wanted to change the way things were. And Wall Street was like, whoa, let me sell a couple of my things just to see what's going on. And then when we realize, oh, all of this stuff has to go through, the Senate and all of these other things to get approved, then everybody put their money back into the market. This is what happened fundamentally. And then you look at other countries and everybody else is doing well. So you're like, if we're the number one country on the planet, the number one business on the planet, and every other country around us is making money, and I go to the airport and I can't even get a ticket on a plane, and I go to a concert and I can't even get a ticket to a concert. Did y'all ever try going to like a Kendrick concert or a Beyonce concert or a Jelly Roll concert or a Taylor Swift concert? You can't get tickets. You can hardly get tickets to them. Y'all know the Masters tournament, the average ticket was like $3,000 and you couldn't find a ticket. Now, when you can start finding tickets and you can and planes are empty and hotels are empty and restaurants are going out of business, then you can start panicking. But until then, guys, the market's going to continue to go up in value. All right. And I keep telling y'all this over and over and over and over again. But you guys, some of you guys want the market to drop because I don't know what's going on in your lives. I really don't. But it's interesting to me how we let what we see on TV affect the way that we invest in the market. But then when we look at the market and we see that we're at all-time highs and we keep missing these highs, and every single time this thing hit the 200 week moving average, y'all see this? This is all the way back from 2011 for 14 years. For 14 years, guys. 14 years. We kept buying the dip, and the best buying opportunity is every time we got to this yellow line. Every time we got close to this yellow line, look at that. That was almost to a T. This is just what recently happened. Oh, actually, that's not even what recently happened. That was the pandemic. Okay. This is why you guys keep missing it, because you're not looking at the technicals. And people like me, the 1%ers, we're making investing and trading easy. We're like, oh, okay, we're close to the 200-week moving average. Time to buy again. And guess what? We got there again, and ain't nobody else buy. And I came in the room, I kept saying, guys, this is when you buy. Didn't you see my receipt? Well, Joel, I'm just going to take this guy's advice over here. And I'm like, does he show receipts? No, but because you want to go with what feels comfortable instead of what's going to make you money. Joel's going to make you money. Maybe that person's going to make you feel comfortable. Joel's going to make you money. Period. All right. So I want you guys to start learning how to do this. All right. Cool. So let's get to the questions again. All right. What were we going to look at? Palantir. All right. So back to Johanna Jimenez. All right. Morning, Joe. Are you bullish on Palantir? So let's pull up Palantir. So for you guys that don't know what Palantir is a company that deals with cybersecurity, and they have a government contract, right? So this is what the government is using to protect them for all the cybersecurity that's going on, or in the cyber wars that's going on the planet. And they got a deal with the government, not only with the government, but with other companies as well. Now, I personally don't like buying companies at all-time highs. I like buying companies on dips like this. Companies like Palantir that are sitting at all-time highs literally today. Well, the all-time highs was 144. We're at 139. I'm like, guys, why are you buying it here when you know it's gonna drop 20% at some particular time? Using the what would Joe do method, you're going to learn that just about every company that's out there at some point within the next year or 18 months, they're going to drop to their average. These are averages. What's an average? If I go to the store and I buy eggs and I see eggs for $2, right? And then next week I see eggs for $4. And then the next week there's a high demand for them and I see eggs for $6. Well, the average is 4. So anytime I see it at 2, I want to try to grab as much as I can, or I want to say, hey, maybe something's wrong with these eggs. These eggs. Why are they trying to give them away for $2? If it's at $4, I feel a lot more comfortable because I'm like, oh, $4, that's the average. $6, I'm not going to buy it at $6 unless I absolutely need them. Most of these stocks are going to always revert back to the mean. The mean is going to be the 200-day moving average. It's the easiest area to buy a stock from. I've been consistently saying this in every single solitary video for the last decade. Every single solitary video, we talk about the 200-day. Y'all don't want to go learn the 200-day. Every single week, I'm showing receipts. Y'all don't want to learn how to use technicals. Every other month, I'm bragging about how much money I made. Y'all don't want to learn the fundamentals and mesh it with the technicals. Y'all want to take the lazy route. Well, Joel, what if I give you this money? What percent are you going to take from it? No, you need to learn how to do it on your own. All right. Quit trying to give me y'all money. Y'all don't have enough money for me to be able to, I'm like, I'm not trying to be funny. I'm just like, your $1,000 or $10,000 ain't gonna make a dent in my life. All right, mate. You come with about 10 million or $1 billion, I might think twice about trading your accounts. But stop inboxing me with these. Joel, I got $5,000. That's a lot of money to you. It's not a lot of money to me. I don't want to trade your $5,000, but I'll help you do it. Right? We'll do consultations. I'll help you figure out what you want to do with that particular money. But you guys need to learn how to do this on your own. That's why I created this. This is my brand. Do it yourself, not Joel doing it. Right? Even though I do a lot of this work for y'all, I come in and be like, buy this, buy that. And y'all still won't do it. I don't know what I got to do. I guess I got to come to your house, log into your account, talk to your spouse in order for you to buy these particular companies and feel like they're going to go up in value. But I'm not going to buy this unless it gets close to the 200-day moving average, right? Or if this stock is 20 or 50% off. That's part of my method. The average company, Apple, Amazon, Microsoft, Google, I'm going to buy them every time they're 20% off if the 200-day moving average is angled up. High flyers like this, Palantirs, and y'all don't even know what beta is. How do you guys know how much money you can make if y'all don't know what the beta is, right? You can figure out the beta by going to Yahoo Finance, which is what I teach in my stock 101 class, right? So if we were to look up Palantir, I want to look up the beta. The beta is going to tell me. I created a video called Beta and Volatility. Just by looking at the beta of this company, you're going to know if it's going to drop 20 or 50% within the next year. Anytime it's over 1.5, Palantir is going to drop 50%, guys. And I love the title that you guys give me as guru. But y'all like, how did Joe know Palantir was going to drop 50%? I don't know. I think he has a third eye. He can see the future. And I'm just sitting back like, no, just look at the beta. Just look at the beta, guys. Just get educated a little bit. Just look at the beta. The beta is 2.5. That's telling you even when the market doesn't even have high volatility, it's going to drop 25%. You increase the volatility, that number's going to double or triple. So when Palantir dropped 50% back here, and y'all was crying like, well, this is the end of Palantir. I was like, you need to be buying it. They got a government contract. It dropped. Let's see how much it dropped. That bad boy dropped. Look at that, guys. 48%. Joe, how did you know it was going to drop about 50%? I just showed you how for free. You take the number, you multiply it times whatever the beta is at this particular time. What is the volatility index? If the volatility index has a, sitting at 15 or 20, all right, take that 20 times whatever. That's how you get it. That 20 times that 2.5, 50%. I figure out I can buy Palantir when it drops 50%. Joe, how come nobody has ever taught me this? Because more than likely, you're not talking to somebody that actually trades and invests them in the market. I hate to tell y'all that. A lot of these guys that you guys are learning from, they're making money off of you, off of classes. They ain't making money because they trading and investing. I'm doing it all. And I'm showing you guys how. All right. Joe, you're not going to be able to beat the S&P 500. I beat the S&P 500 every year easily. All right. How? If the market people that are out there that are making millions or can't do it, how are you able to do it? And I'm like, I don't know, but statistics say that if Palantir is up 100%, why am I not going to buy something like that? It dropped 50%, guys, and then it rose. Look at this. It dropped 50%. Oh my God, Palantir. And then it rose 124%. Y'all so consumed with it dropping 50 that you can't make money on it when it went 100% in what, 2 months? I'm in it. We talk about it every other day. Some of y'all hearing about it for the first time right now. I don't know how. We talk about Palantir in every single solitary video. All right. Ooh, so I'm going to buy some today. That's the lazy route. And you can't buy it today. Wait for it to drop 20 or 50%. All right. All right. Let's get to your questions. All right. Oh, hold on. All right. So am I bullish on it? Yes. Am I buying it now? No. All right. William said, happy Juneteenth. I think that's Desireen. Desireen says, hi, Joel. Now, guys, I don't have my glasses on. So, hi, Joel. Thanks again for what you do. What do you think of Kava right now? Is it still a good buy as an investment? All right. So, Kava, guys, is a Mediterranean. Now, I love fast casual companies. All right. Fast casual is really, I love these new restaurants that are coming out. Right. And the reason why I love these new restaurants that are coming out is because a lot of them are a lot healthier. And your Wendy's and your Burger Kings and, they're all, I'm not going to say they're going away, but these companies are so big, you really can't make any money in them. I love these smaller companies that are starting to grow in value, and Kava is one. Now, how do you know how big Kava is? I don't know how big Kava is by looking at the stock price. So what I like to do is I like to go to things like ChatGPT, and I want to know what the market cap is. So what is the market cap of Kava, and is it a good investment? All right. So we're using ChatGPT Live, and it's pulling up a chart. Did y'all know you can pull up the charts on ChatGPT? And as you can see, the charts are down for Kava, right? So it says that the market capitalization is 8 billion. Now, 8 billion, guys, for a company like Kava is small. This is where you make your money. Y'all think you make your money on the stock price, and you don't. You make your money on the growth of the market cap. So how big can this bad boy grow? Well, what I like to do is when I pull up companies like Kava, I want to pull up companies that are similar to it, right? So I'm going to pull up something like a Chipotle, right? To get an idea, it's kind of like, this is just me coming from real estate. Coming from a real estate background, I always want to look for comps. What can I compare this to? Because investors are going to do the same thing. investors are looking at Kava and they're like, all right, it's similar to Chipotle. It's kind of on the same growth trajectory. So if the market cap of Chipotle is 70 billion and Kava is only 8 billion in size, think about it. If you ever see just as many Kavas as you see Chipotles, then you can make about 6-7 times your money. I put $10,000 into Kava. It might be worth $100,000 really, really quickly. Why? Because Chipotle grew very, very quickly. So to answer your question, yes, I think it's a great investment. Why is it going down in value? I think it's a lot to do with the tariffs, right? Everybody kind of wants to see what's happening with the tariffs, but also because now that the tariffs aren't really a big scare, a lot of people that had their money in some of, we call these small cap companies, um, took their money out of these small cap companies and they went after the big companies that they know they can make money in, the Apples, the Amazons, the Googles, the Nvidias, right? And then what happened is when those stocks hit their all-time highs, you'll start seeing money flow back into companies like Kava. So how do I feel about Kava? Kava is in both of my kids' portfolios as a growth potential, right? And it's also in my portfolio. So I actually believe in Kava as well. And when's the best time to buy a company like Kava? Well, first of all, let's look and see what the beta is, right? Most of the time, these small cap companies that can grow, they're going to have a pretty high beta too. But you see, the beta is 2.8. The beta in Kava is higher than Palantir. So if Palantir can drop 25 to 50% every year, Kava can drop 25 to 50% a year. Not only can it, it's going to drop 25 to 50% within the next 12 months. So I don't have to buy it today unless it's down 25 or 50%. So if I go to the highs of Kava and I see that Kava was $172 in price and now it's sitting at $75, well, that's that sweet spot. I love buying companies. Remember, guys, Kava had a 2.8 beta. How do you use the what would Joe do method? That 2.8 times 2, because we have high volatility, is going to take you to 5.6. That's 56% down. That means when this stock is down 50% or more, you should be buying it as an investment. Where are we right now? We are sitting at 55%. I know you guys are like, oh my God, Joel, this is magic. Why didn't anybody else tell me about this? I did. Do y'all know that my beta volatility video is the least bought video that I have? And I'm just doing calculation for calculation, showing y'all the bottoms every single time. But y'all won't go buy it. Y'all want the latest. I want to learn how to day trade. I want to learn this. I want to learn that. I'm showing y'all how to do it, but y'all don't want to do it on your own. It's literally the exact amount from the beta times whatever the volatility is right now. It literally was one of the first videos I've ever created, and it's the least profitable video that I have. Maybe y'all ain't supposed to make money. That's how I look at it. I'm like, well, probably because, Joel, how are you going to be a 1%er if everybody knows your secrets? Because everybody don't want to implement it. They're going to want to go out there and day trade and do this, that, and the other. But to create wealth, right, they're not implementing those particular strategies. All right. So anyway, so yeah, I think you should be buying it now as an investment. As a trade, guys, when the 200-day is angled down, you kind of don't want to be around, right? So if you're trading this to the upside, I would be like, hold off. Because as a trader, I have to go by what the technicals are telling me. And the technicals is telling me that the average price of Kava is going down. So short term, I might not want to make any money. But long term, the 200 week isn't set up yet. But again, it's an $8 billion company. That's freaking small. Right? It's still growing. People love Cabo. When you go to it, they always talk about how great the food is. All right. So yeah, long term, I believe in it. Short term, it might have some. It might go down. All right. Good question. Andre said, "What's happening, Joe? What up? What up?" Shanika said, "Good morning. Good morning, Miss Jackson." Darnell said, "Netflix has had quite a run. What's your thoughts on them as investments long term?" Look, Netflix and Spotify, in my opinion, is one of the two best companies out. Well, actually, Netflix, and I'm only naming companies that have subscription services. Any company that has a subscription service, Wall Street loves. Why do they love it? Because you can literally tell what the growth of the company is just by looking at the subscriptions. The subscriptions has increased, guys, in Netflix. All right, even after they raised the prices and made a lot of you guys who were still in Netflix start paying now, which is probably why they're making more money now. But I'm always going to believe in Netflix. This is one of those companies I don't ever sell. Both my kids have Netflix in their accounts. Do y'all know that I've been pushing Netflix ever since it was a $25 stock? Ask some of my closest friends. They come to me all the time like, "Joel, I can't believe you were telling me to buy Netflix when it was $25." I was like, "Yeah, and you should have bought it because the subscription service was only like 10." I'm like, "You couldn't buy one share at 25?" And now the shares are at $1,200, right? So you could have just bought it every time it hit this little yellow line. Now it did. This is when they said they were going to crack down on everybody. But the reason why I believe in companies like Netflix is because every time I go out the country, guys, every single time I go out the country, Netflix always works. And there's no problems with the streaming, there's no problems watching the video. Every other provider, when I try to leave the country, they try to be like, "Nah, you're not in the States anymore. You can't watch this." Or, "Nah, you can't watch this because you're here or there." Netflix, I don't care where you at, it works. And then it works on your phone as well. All right. So I love Netflix. It's the best streaming company that's out there. Most people are not going to get rid of their Netflix subscriptions. There's a show for everybody to watch on Netflix at all times. It's just a great company. Now, am I going to buy Netflix way up here in the stratosphere? Heck no. Heck no. I'm going to buy Netflix when, let's go look at this beta to figure out what the beta is of Netflix. The beta of Netflix is 1.5. That means, guys, it's probably going to drop 20 or 30% at some point within the next 18 months, right? So what's 30% off? If I wanted to buy Netflix 30% off, you can, some of you guys that can do the math in your head, you're like, "Oh, 1,200 times 30, that's $360 off," right? So that's going to take you down to about, an $800 or $900 stock, right? So, if Netflix was able to, and mind you guys, it might continue to keep going higher, but whenever it hits a high, it's probably going to drop about 30%. 30% from where it is right now is going to put you somewhere in the 945, 1,000 range. Buy Netflix when it gets back down to 1,000. It'll probably see 999 at some point. Trump will go out there, tweet something. Everybody will think the world is coming to an end. Netflix will drop in price, and then it'll continue to go higher. Okay. But a lot of you guys missed out on a lot of money in Netflix just within the last, well, I said 11 months back then. But yeah, from 2023, which isn't 11 months till now, Netflix grew from $500 to 1,200 over. That's a pretty decent move in a company that everybody and their mama has a subscription with. Like everybody, it don't matter who you are, you can watch Netflix. All right, so I love it. Let's look at Almar said, "Top of the morning. How do you feel about Circle?" I know it's common for IPOs to have a big pullback, but this one has run further than I expected. All right, so Circle, guys, the reason why Circle is moving is because if you're into cryptocurrency, if you're in crypto, you're gonna start to understand that they just put out some laws this week. Like Congress just put out some laws that are legitimizing crypto. Well, is Circle owns the USDT cryptocurrency. So a lot of you guys don't know what that is. So Bitcoin, you can buy Bitcoin right now. And if I pulled up Bitcoin, actually, let's see if we can pull up USDT. So on Yahoo Finance, if I was to pull up Bitcoin, I don't know if y'all knew you could pull up Bitcoin on Yahoo Finance, but if you pulled up Bitcoin right now, you'll see that it's up or down a 0.5%. And I mean, yesterday, I believe it was down like 3% or up 3%. I don't know. But at some point, Bitcoin can move up or down. So a lot of people are afraid of it because they're like, I can lose all of my money. So they created what they call stable coins, which is companies like USDT. So USDT, which is crazy, you should be able to pull it up here. Huh. Which I guess you can't. But companies like Tether, companies like USDT, these are what we call stable coins. And when you buy this particular coin, it's stable. It doesn't move up or down. It might move up or down like a penny, right? But it's not going to move so much that you lose all your money. So a lot of people love being in the crypto space because instead of selling all of their Bitcoin and going back to cash, they can sell their Bitcoin and put it in USDT, and then all of their cash is safe still on the blockchain. And then when they decide they want to buy Bitcoin again, they'll just convert their USDT, or they'll use their USDT to buy the Bitcoin. A lot of you guys didn't know that you can do that also. I can convert my Litecoin into Ethereum and then convert my Ethereum into Bitcoin and then sell all of my Bitcoin into cash and then put that cash into USDT. To make a long story short, Circle IPO'd recently. They own USDT. So the reason why they went public is because they want to start having institutional money be able to come in and invest in a company like this that's managing a lot of the crypto on the blockchain. I know it's kind of crazy. So Circle, again, it just IPO. Let's look up the let's even ask what is Circle so that you guys can get a definition. What is Circle and what is its market cap? So when you pull up Circle Internet Group, which is CRCL, it's 172. Now, when it IPO'd, guys, it IPO'd at, this is crazy, it IPO'd at a price of about $80. I think it was like 60 though, but it's saying $80. Maybe it was 60, and then when it opened that day, it was at 80. But look, it ran from $80, guys, all the way up to $199. All right. It IPO'd on this date, which was June the 5th. So by June 5th, June 18th, which is 13 days later, it went from a $80 stock all the way to 200. Now, the only thing that's interesting to me is I want to know what the market cap is. Now, the market cap right now is $45 billion. So, $45 billion is a lot, but it ain't too much, right? I'm thinking, 100 billion, like, think about it. The $1 trillion companies that are out there are Apple, Microsoft, Nvidia. They're $1 trillion companies. So for this company being worth 45 billion, that's not a lot of money in my opinion. So this company does have, in my opinion, still has some room to run. Investors love looking at whole numbers too. So 50 could be a whole number, but 100 billion is probably the area it wants to get to, and then it'll chill for a little bit before trying to go to like maybe 500 billion. So there's still a little bit more room, in my opinion, left in it. But if you're interested in a company like this, I ain't buying it unless it drops 20 or 50%. even though it's running right now. Now, if you have to have it, because I've been thinking about putting this um, in my kids' account. If you're thinking about buying something like a circle, which is hey, we just saw it. Circle, what was it? CRCL? I don't know why it's not popping up. Why is it not popping up? Hold on. What was circle again? Oh, CRCL. All right. CRCL. Probably because it just IPO. So let's look at it on a. So pretty much, let's look at it on a. All right. So this is pretty much what it's doing. It doesn't even have, it's not going to have any moving averages, right? It's just moving up, 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 up. And I mean, it hit 200 today. All right. I want to buy this stock when it drops 20 or 50% because it's moving. Even when it dropped here, it dropped about 15%. So you know it's going to drop 15 or 20%. So if you have to buy this stock, I ain't buying it until it drops to, if it hits 200, 20% off is going to put you at 160. All right. I'm not buying it unless it gets to 160. And to be honest, knowing me, I want it to get cut in half. So I want it to drop to about $100 if I feel really, really comfortable with buying it. That will take it from a 45 or let's just say $50 billion market cap company to 25 billion. So now if it runs from 25 billion to 100 billion, I make 4 times my money. I'm always thinking in numbers when I buy something. If I buy this now and it gets to 100 billion in size, I make double my money. I know a lot of you guys are looking at numbers like 1,000. Ooh, this can be $1,000 a share. I don't look at it that way because that means it will have to grow 5 times from where it is right now. That means a $50 billion company to a $250 billion company. Can it reach 200, 250? Yeah, but I want it to go back to maybe a $25 billion company and then it rises to 100 or 200 billion. Then I can make 4 to 8 times my money. Hopefully that makes sense. If it doesn't make sense, rewind this and watch this 5 or 6 times. Okay. All right. Shanika said, when is the appropriate time to purchase UNH for a long position? So, guys, UNH, United Health Group, is the best insurance company in its space. Like, it makes no sense, right? So, UNH, guys, is the company where the CEO got murdered, and all of us saw it, on TV, right? I'm even thinking about buying UNH. So, UNH has short term. This means it has short term bearishness. I actually think we bottom. I think it's way up now. I'm being greedy trying to buy it at $300, but I've been thinking about buying this company as well because it used to be a $630 company. Now, guys, even companies like this dropping 50%, guess what? Meta, Amazon, all these companies have dropped 50% in a year before, right? So after all, think about this. I want you guys to think of it like this also. Everybody who sold this stock probably is already out of it. And then every now and then you'll see more news that come out that's kind of negative that involves the company. So short term, you might see some bearishness. Long term, look at what angle you see this 200-day. Now, here's the thing. I get it. It really ran through this 200-week moving average. And not only did it run through the 200-week moving average, you also see a 200-week moving average that's angled down. So I was concerned when I saw that. but they're the number one company in their space. And that's the only reason why I'm really considering buying this company. What I also like about this company is that we haven't seen this price in this stock since 2020, since COVID. So we took back all the profits it's made since COVID. So a lot of the companies that are out of this company, out of this stock, I believe are out. So if you're gonna buy a company like this, it is 50% off. I understand the 200-day and the 200-week moving averages are angled down. All right, I haven't even looked at the month chart, but the month chart, guys, look at the month chart. This is the chart that we rarely look at. Why does it say UHG? Oh, United Health Group. I got it. All right. But look at this. I hardly ever see a company get close to the 200. The 200. I can't even say it. The 200 month average. That's wild. Okay. So I'm even saying, all right, it's time to buy this stock. Like, how low can it actually go? Like, this is the lowest that it's been since 2020. So I'm thinking about taking a shot. But guys, looking at the 200-day moving average, don't expect anything in the next 2 or 3 months. This is a 2 to 3 year trade. Investment. So yes, I'm thinking about putting this in my portfolio because if it gets back to its all-time highs, you make 100% return. So if I put 10 grand in this company, if I lose 10,000, is it going to kill my, is my family not going to be able to eat? No, we're going to be able to eat. Is it going to even affect my portfolio? No, because I even use the 90-10 rule when I'm investing in companies in my portfolio. I don't let any company be larger than 10% of my portfolio, all right, or 20%. So by putting this in my portfolio, even if it drops another 50%, if you can stomach it, then buy it. If you can't stomach this dropping for the next 3 to 6 months, this is not an investment for you because they're going to need a catalyst to come back up for this company to go back up in price. It might sit down here for maybe even a year before it starts to go up in value. But once it starts to go up in value, I promise you guys, it's going to go up really, really quickly because it's not like they're losing money, right? They're the number one company in their space. All right. So that's how I feel about that. Great question. Jerome, this Pastor Harris. All right. Pastor Harris says, Joel, if you're investing long term, how often should you be following that particular stock? Outside of the market cap and the 10x, possibly, is there another indicator for long-term investments? All right, let me ask that question again, right? Joel, if you're investing long-term, how often should you be following that particular stock? So let's treat this like your 401k. A lot of you guys that have a working portfolio, I tell everybody when you pay your bills on the first of the month, check your health, right? What's going on financially? What's going on with me physically? On the first of every month, you guys should do a full check. So, in my opinion, you should be checking that company every month. All right. Take that particular company, and I literally want you to go into a check, into some type of GPT. Everybody on this call should have access to some GPT. I know a lot of you guys are like, I don't believe in technology. Guys, you're missing out. Whatever GPT that you're using, ask the question, what catalysts are coming up in the next 30 days, or what catalyst or what information has come up that has involved this company in the last 30 days. So at least you know in the last 30 days what's going on in that particular company. Now, I know a lot of you guys got 15 or 20 companies that you got to do a check with. And I mean, if you want to make money, that's what you're going to have to do, right? I check my long-term portfolios like weekly, right? So I don't have to really do it every month. But you should at least come in every month. And if you can't come in every month, at least come in every quarter, because even big businesses, That's why they have quarterly reports. They have quarterly reports to let you know what's going on with the company and what their perspectives are for the future for that particular company. And then that's going to determine short term if people want to get in or out of those particular stocks. Very, very good question. Hopefully, I was able to answer that for you, Pastor Harris. All right. Brandon said, dropping jewels. Ty- Tyron said, love Kava. Tyrone. Christian said, NVIDIA long-term investment. All right. So NVIDIA. NVIDIA keeps going back and forth with Microsoft as being the largest company on the planet. I know a lot of you guys didn't even know that. You're like, hold up, Joel. NVIDIA, a company I've never heard of, is now the largest company on this planet. I'm like, where have you been hiding? I've been talking about NVIDIA since 2016 when my kid sold his bunk bed and he used those funds in 2016 to buy one share of NVIDIA. Do y'all know that this fool has like 40 shares of NVIDIA now? And he's only 18. He got 40 shares of NVIDIA. It might be more than that. Okay. So NVIDIA long term, do I believe in it? Yes. But I've been branching off into the companies that NVIDIA is investing in so that they can continue their growth. So what are some of those companies? Well, let's go to ChatGPT. I know ARM is one of them, right? So when I'm interested in a company and I see that a lot of money have been made in it, I own NVIDIA, guys, and I'm just going to keep holding my position because I got a 2,000% return. And I make all the educators and haters that are out there mad because they're like, how do I catch up with a 2,000% return? That means I might have to hold it. I can't talk crap to Joel for the next decade. And I'm like, should have been buying it 10 years ago. So there's some stocks I'm going to hold just so I can come in and be like, show me what you got. Do you have a 2,000% return? I didn't pull a 2,000% return on like 20 companies that I showed you guys in the room, including Bitcoin and Tesla and Nvidia. All right. So am I gonna buy Nvidia here? Nah, I'm already up 2,000%. But I do like buying what they're buying now. So every quarter I want you guys to do this too. What is Nvidia? What companies is or are? What companies are Nvidia? That don't sound right. What companies are, guys, I sucked in English, which is great. Like like 3/4 of my brain is like math. The other 10% it sucks. What companies does Nvidia invest in currently? This is why I need an assistant. Jesus, Web. All right, so this is live. All right, so Nvidia is investing in CoreWeave. Nvidia owns over 24 million shares of this AI cloud infrastructure company. So if they buying it, your butt should be buying. If the number one company on and this, oh God, y'all rather listen to Uncle Ted tell you what to invest in and Auntie Pet and Auntie Peg. Y'all rather listen to them tell you what to buy because they got a stock tip than the largest company on the planet. That's how y'all be thinking. Like y'all are smarter than they are. The egos out there are hilarious to me. So what are they buying? They're buying companies like CoreWeave. Nvidia owns 24 million shares of this company. Do you buy it today? No. Buy it when it's 20 to 50% off, people. You're not knowing how to buy stock, folks. ARM, did you buy it today? No, a lot of these are all-time highs. Y'all missed out on it when we were telling you to buy it. Applied Digital. Guys, I was putting y'all on the Applied Digital back in October and November. Okay. Additional equity stakes. I don't really mess with the biotech type companies, but look, they exited their position in SoundHound. So if Nvidia gonna sell SoundHound, Joe gonna sell SoundHound. Some of y'all still holding SoundHound. Why? Nvidia's out. The big players that make these companies grow in value are gone. And who's left holding the bag? The people that are like, who wants to come and buy us now? Well, Nvidia's out. Why y'all still holding on to SoundHound? They gone. And I came in the room and told y'all when they were selling. What is this? Safe Super Intelligence? I don't even know who they are, but it's something that we need to look into, right? But you guys need to be doing this on your own, right? This is guys, we have access to the same material that these multi-billion-dollar firms have now. That's who they're competing with now. The little man has now finally been able to catch up. Okay. And I'm trying to show you guys some of the tools that I'm using and why I'm able to hit these stocks. Yes, we're given a list of these stocks. No, am I buying them today? No. I have a strategy behind when I'm buying these particular companies, whether I'm trading them. Now, you traders, if you want to trade CoreWeave, great, but we're going to use a different strategy than dollar cost averaging and buying 20 to 50% off. Some of you guys are still like, oh, I thought you meant buy this 20 to 50% off on a trade. So you wait till it drops 20%, you buy it. Then in 3 months, when it's not up in price, you're now like, man, the what would Joe do methods suck. No, you just don't understand it. The very first question that you ask yourself in the what would Joe do method is, am I trading or investing? If I'm trading, I'm going with momentum. So if I'm trading, I'm never going to short CoreWeave. That's why a lot of you cats that are in here that are bears, we don't get along because y'all don't know how to trade because y'all try to go off y'all's gut. Ooh, I don't like this person, so I'm going to short. Ooh, Apple's at all-time highs, so I'm going short. That makes no sense whatsoever because companies that hit all-time highs usually continue to hit all-time highs. Try shorting all the company. Try buying all the companies that are on the 52-week low list. I have a bunch of people that are like, Joel, I have a strategy. Somebody told me if you go to the 52-week list, the companies that are on it, that's where you're going to make a whole bunch of money. And I'm like, maybe long term, but short term, no. Because companies that tend to go down keep going down. Companies that keep going up tend to go up. When you're trading, yes, at some point they're going to reverse and come back down. But are you trading or investing? Are you trading or investing? Are you trading or investing? Trading is with momentum. Investing, I can counter trend. A lot of y'all got it backwards. You trying to trade as a counter trender. That's why you losing money. The best counter trend traders are the ones that are using the VIX. When it hits 40 or 50, yes, you can counter trend now, guys. Going off your gut because so-and-so said this, that's not how you make money. Every now and then you're going to luck up and make money. I get it. That's how this game is. You got a 50% chance of making money. But I guarantee you, over time, you're going to lose it all. I've seen it happen because that's why I do thousands of consultations. When you're trading, guys, you go with momentum. When you're investing, then you can counter trend when it's 20 or 30% off or near a moving average. I'm showing you guys this from experience and from receipts. I don't care who I'm arguing with because I'm always like, well, then show me what you're doing. Show me some receipts. Show me when this worked. Show me the days and the amount of money that you put into it and how you made it work. And then I piss everybody off and they call me an asshole when I do that because that's just where I'm at in my life. I don't have time to deal with theories or hypothetical situations or this is just common sense. No, it's not. Because if it was common sense, everybody will be at all-time highs right now like I am. And the majority of you guys aren't, because you're listening and doing the wrong thing. And I say this over and over again because I want you to start understanding that if your portfolio ain't at all-time highs, you need to look in the mirror and say, Joel was right. No, you need to look in the mirror and be like, there's something that I'm not getting. There's something that I'm missing. There's something that I need to go through fundamentally. Why every time I go this way, it goes that way? And a lot of the reason is because the strategy that you're using is the opposite of what you're supposed to be doing. All right. And that's what I help you guys with. All right. Very important. All right. Buy the things that the big people are buying, like the people that are moving the market. That's what you should be buying. And when they selling, you need to leave. When Berkshire Hathaway or Warren Buffett is buying something, they move the market. When they sell things, it moves the market to the downside. You guys need to follow that big money like that, but then make sure that the technicals and the fundamentals match. All right. Great question. All right. What, I got about 30 more minutes. All right. Brandon says, I've been watching Pepsi sitting at 5-year lows. Do you think it's a buy? Let's look at Pepsi. All right. So Pepsi, a lot of people that love Pepsi, first things first, when we pull up something like Pepsi, I always want to look and see what the beta is of a company, because the beta is going to tell you if it moves. Pepsi has been around for so long, it really can't grow as a franchise, right? So Pepsi in the last 5 years, if you had bought Pepsi 5 years ago for about $129, you would have made no money in 5 years. Look at the beta, guys. The beta is like anything lower than 1.0, you ain't really gonna make no money. Now, some of you guys are learning about this right now, even though you done took a $20,000 class, and it sucks that you guys are not learning very simple, basic, fundamental principles of the market in a free video. All right. Beta is going to tell you how much this thing moves. I immediately know if I can compare Pepsi with something like an Nvidia. If you're trying to make money really, really fast, I ain't buying Pepsi. Right? Pepsi, there has to be a reason for buying it. I know a lot of people that buy Pepsi because they're sitting on $10 million. What does that mean, Joel? Well, that $10 million, if they put $1 million into Pepsi, they're going to get a $40,000 check every year that they can live off of. So just by putting $1 million in Pepsi, they're like, yo, I get $40,000 by the end of the year. I can use that $40,000 for an African safari. So they'll put $1 million in Pepsi because they know it's not going to move that much, and they're going to get paid a nice little dividend just by owning it. That's the strategy behind it. You guys that got $100 to your name, not you, Brandon. I don't mean to be talking about you specifically, but I got people that come to me who Uncle Ted then told them to buy Pepsi, Coke, and Heinz if they want to be rich, and they putting $50 or $100 in Pepsi every year, and then they're wondering why their friends over here are making all this money in Nvidia and Apples and Amazons and Googles. And the reason for it is because just because Pepsi is a stable company doesn't mean you gonna make a whole bunch of money. Just because the company makes a whole bunch of money doesn't mean you gonna make a whole bunch of money. You make money on the stock. So in my opinion, the only reason I would buy something like Pepsi, it is at its 52-week low. So, if you look at Pepsi, let's look at it on a longer chart. Let's look at it here. So if I pulled up Pepsi here, it's closing in on its 200-month moving average. It's sitting through its 200-week. So if I wanted to buy something like Pepsi, I see different areas that I like. One is the area that it's at right now. So if you want to take a chance at buying Pepsi because you're like, I have all this money, Joel, and I really don't want to lose it all. I need a low beta company that's going to give me a high dividend. This is what you buy. Okay. And you see that the lowest that has been since 2020 was sitting right around $100. That means if you can stomach a 30% loss in something like a Pepsi. So if you had 10 grand and you're like, maybe one day this is going to be worth 7 grand, but I'm willing to hold on to it because I'm going to make a 4% dividend every single year. So in 7 years, I'll make back that 30%, and hopefully the stock starts to rise in value. Then you buy this company. If you're expecting to make some money on it in the next 3 to 6 months, this ain't the type of company you buy to do that. Okay, because the momentum is down, not up. Okay, when you want to make money trading, you go with momentum. I always say that. I argue with counter trenders all day long, and then I'll be like, well, then show me your receipts on what you're doing, and then maybe I'll become a counter trender. And then they're like, Joel, I'm not gonna do that. And then I'm like, all right, then I'm never going to do it. But the trend is down. The trend is your friend until it ends. The trend of Pepsi is down. So as a trader, I'm never going to trade this to the upside. All right. As an investor, if you want that 4%, cool. All right. But it's a slow moving company with maybe some 30% downside. All right. All right. Let's look at QUBT. All right. I'm getting a lot of questions about QUBT. All right, so QUBT, guys, are companies that are really, really well. For one, guys, they're saying that the technology for quantum, this is quantum, quantum computing, right? QUBT stands for that, right? So for you guys that don't know what it is, let's pull it up on Chat GPT. They said that the technology for quantum won't be around for the next 10 years. So anybody that's invested, you can trade and invest in this particular company if you're savvy. All right. If you're really, really savvy and you pull up a company like QUBT and you're waiting for it to grow and value and try to catch the move over the next 10 years, well, the market cap of this company is only $2 billion. And you're talking about a company that can be something like a Palantir or these companies that are 100 billion or 200 billion in size. These companies have the potential to get there, but they're too far ahead of what we have available right now. So these are companies I tell people to buy and then stash and then check in on them 10 years from now. Okay? But quantum is one of them. QUBT is one of them. QBTS is another one. D Wave, and if I'm correct, is that okay? So that is Daryl. So Mr. Hale that's answering this question right now. Um, we had we both did a golf tournament for the USAM tour this past Father's Day. He's actually in a flight that's better than mine. He won his flight, I won my flight. We took a picture together, so I want to congratulate him. I think he shot like a 76 and then had to go into a playoff and then beat that cat too. So a 76, guys, is like respectable. So he's doing his thing, tennis pro turned golfer, but he's also educating himself in the stock market. And you guys need to look out for his son, because his son is going to be the next Tiger Woods. We were playing yesterday. This cat was putting and chipping better than everybody that was out there, and I think he's only like 4 or 5 years old. So I'm pretty sure that Mr. Hale Daryl is putting this in his kid's account. So I want to congratulate him for that. But anyway, so QBTS is another quantum computing company that's about 5 billion inside, which is interesting. I thought QUBT was larger than this one. Huh. They all have decent betas, but they all have small market caps that can grow. Guys, you're not going to know how large a company is by looking at its share price. You got to look at its market cap. And if companies like this can grow to 100 billion, 200 billion in size, you have the potential of making like 10 to 25 times your money. You might have to wait 5 or 10 years for that to happen, but at some point This was how small Nvidia was, right? This was how small Palantir was. This was how small Snowflake was, or Twilio. These smaller companies that have grown in price, in the last decade. So, if you're about quantum computing, um, you also want to probably buy nuclear, because in order for quantum computing to work, because of the high amount of power that they're going to use, you're going to need nuclear power, and then you're going to need something to cool all of these particular things. So I like to buy, if there was a if there was a, what do they call it, if people were mining for gold, instead of running after the gold rush, or trying to make money off of the gold rush, I like to make money off of the shovels that are used to dig up that particular gold. So in this particular case, go on Chat GPT, look up the particular companies that are going to help make companies like this grow to 100 billion in size. All right, good one though. All right, so we got Sibin. I don't know how to pronounce your name. I'm sorry, Mrs. Lynch. Ratata. Hi, Joel. Will you talk about SoFi? All right. So I love SoFi. I have SoFi in my portfolio. So SoFi, guys, is a fintech bank. All right. If you've gone to SoFi Stadium all the way out in California, beautiful stadium. Um, it's a pretty good company, and it's also growing in value. So SoFi, let's look at the market cap of it. SoFi's market cap is 16 billion. That's small, guys. Anything less than 25 or 50 billion is a little baby company that can grow to an adult. That's how you make your money in this market, not by saying, "Ooh, it's $15 a share. I can buy 100 shares." Yeah, but sometimes these companies with these small share prices are fooling you at how big they are. Okay. For example, if I was looking at something like a Berkshire A company, right? Look at how big the share price is. $728,000 a share. You would think that this was the largest company on the planet, where almost one share is $1 million. This is Warren Buffett's company. But the company's $1 trillion in size, right? It's $1 trillion in size. It's almost, the share price is dang near as much. Anyway, so yeah, the share price is pretty high, but I do believe in SoFi. If you were thinking about buying SoFi, I'm thinking about buying SoFi as an investment. But look at this, guys. This is the kind of chart you want to look at. The 200-day moving average is angled up. The best time to buy it was when it hit the 200-day. The 200-week moving average is angled down. Now, you see everybody bought it when it hit the 200-week moving average. So you see they're buying it here, and you see that they're buying it here. So start buying like the one percenters like myself. Like, we know when to buy companies like this, when they hit the 200-day or when they're off, 10 or 20%. And because it's a small company, it has room to grow to the upside. It's not even at its all-time highs. It's actually 50% off from its all-time highs, which was $28 a share. It's $15 a share right now. So definitely am interested in something like SoFi. All right, Okta. Okta is just like Okta is also one of those companies that you remember how I was telling you guys to buy QUBT? Well, Okta is one of those companies that's dealing with like nuclear, that's going to help companies like QUBT, and it's also helping all of the AI that's out right now. So Okta, I haven't started to invest in Okta yet. I need to, but the 200-day is angled up. Anytime the 200-day is angled up, it increases your luck. That's a corny saying that I made. The 200-day was angled down, so we didn't want to be around, but it looks like it has a lot of support right here. And it's had a lot of support. You see how it's hitting this trend line? So maybe it can drop down to about $85. People will buy it, but people love this company because, let's ask ChatGPT, what is Okta? What is Okta and should we invest in it? Nope, not okra. I said Okta. What is Okta, the stock, and should Oh, I think my chat BT is going to ask us. Oh, well, it's $99 a share. What is Okta? Okta is the leading identity and access management platform. Oh, this is. Ooh, I got that wrong, guys. I thought this was the. I'm thinking of a different company. I apologize. I'm usually right, but that's why we pull this up on. This is why we pull this up on Chat GPT. Leading identity and access management platform for enterprises, founded in 2009. All right. Revenue 2 billion, PE ratio, average buy within 12 months. Competitive landscape, Microsoft Azure. Upside potential 25% long term. Digital transformation accelerates and demands growth, a market leader with strong fundamentals. So, yeah, with a small market cap, this company has room to grow. I'm kind of interested in what company I confuse this with because I usually don't make mistakes when it comes to stocks. So, I apologize for that, guys. But at least ChatGPT put me in check. All right. Options in Motion said, peace. This goes back to the last question that Tyrone made. He said, "You're right. Netflix always works when I'm traveling." Raymond says, "What's up, Joel? What's good? Keep on teaching to the day I die." Tavy Wynn said 159. You got me on that particular one. Raymond said, "Go Pacers," from Indiana. All right. Uh, Joanna said sound long term. Now, remember when we were looking at sound earlier, we noticed that was being sound was sold by Nvidia. Now, guys, when I got you guys in sound, it was way down here in the $2 range, and I made you guys a whole fortune. Some of you guys had never seen 1,000% return, right? So you guys got in sound back here when it was $2 a share. It rose all the way to $24 a share. And then unfortunately, I got out right around $22. All right. Then the news came out that Nvidia was selling it. So then everybody else started to sell sound. And as you can see, looking at the charts, it looks like we have short-term bearishness. But if you're going to buy sound, as a short-term move to the upside, this looks like a good buying opportunity. Again, I'm not invested in. When I first bought sound, I bought sound because Nvidia bought it. So then I didn't expect to get 1,000% return in a couple of months. Usually 1,000% return, it takes 5 to 10 years for that to happen. So when you see money like that in your account, you can't sit in it thinking, well, maybe it'll go to 1,000,000% return. Like 1,000, usually when your stock gets to 1,000 to 2,000%, you probably want to start selling it, especially when it gets to 1,000 or at least half your shares. And then you can invest that money into maybe something else, an alternative company or a derivative of that particular stock. Like maybe something that's in the same space. Maybe you look up what is sound investing in and then try investing those funds that you took out into something else. But in my opinion, I made all my money I could. I believe in sound and I'm on to the next sound. But if you're in this particular stock, the 200-day is still pretty strong. So, until that 200-day starts to angle down, you can stick with it, but you know, until then, the 513 cross did happen about 4 weeks ago, but it looks like it can't take off. But again, we're at the 200-day moving average. So if we break these lows, I would get out. If we break the lowest low here, which is around $9.01, I would get out of sound because it could drop in price all the way back down into the threes. So, if you have a significant amount of money in it and you're thinking about what you should do, there's nothing wrong with selling half, especially if you have a big percentage in it, right? You just won't make as much money, but then you at least won't lose as much money if it falls in price. So Shanika said, thank you from earlier. Kim said MB, is that IS? NBIS. You got me on that one. I'm still mad that I didn't know Okta. Anyway, NBIS. That's going to keep me up all night. NBIS. Oh, Nebius Group. All right, cool. So Nebius Group is at its all-time highs. So you know me, if I'm in it, I'm going to stay with it. Am I going to buy it up here? You will never see Joel buying at the all-time highs unless he's day trading. I'm just trying to make, a couple of percent here or there, and I'm out the same day. So if you're in this particular stock, stick with it. It looks good. Week chart looks good. Day chart looks good. But I would stick with it. But I'm not buying it unless it drops. Well, let's look at the beta. So when we pull up the beta for Nebius, when you pull up the beta, you're going to see that it's right at 1.0. So it kind of moves like the S&P 500. So this company can be down 10 or 20%. So I would buy it if it's 10 or 20% down with a 1.0 beta. Okay, cool. All right. Shanika said the chip sector is now on fire. When she says chip, she means semiconductor chips. Companies like Intel, Nvidia, AMD, Micron. But what's your view on cloud computing companies like RGTI? So cloud computing companies like RGTI is kind of like your QUBT and your QBTS. All right. They've run really far, really fast. So let's look at the charts. RGTI, Rigetti Group, Rigetti Computing. But as you can see, these stocks ran from $2 to $21. That's 1,000% return. And now they pulled back. Now, remember, my sweet spot for a company with high beta is going to be 50% all day long, right? The Apples, the Amazons, the Microsofts, the Netflixes, the Costcos, the Walmarts, I'm going to buy 15 to 20% off. The high flyers, you won't catch me buying them unless they're 50% off or more. Well, the high was 21. Half of 21's 10. That's right around this area. That's why a lot of people came in and started buying this stock again right around the 7 area, which is crazy because that's like 60-something% off. And as you can see, it ran from $7 back to about 12, which was about a 50% move. And you start seeing people sell. So they're using these stocks, guys, as trading vehicles. Are people investing in this? Yes. But remember, companies like this are not really going to take off for another 5 to 10 years because the technology is not here yet. Okay. But in the meantime, you can make some money off some nice little trades, but I'm not taking a trade unless the momentum starts to go up in price. And anybody that's watched my 513 crossover strategy video, you would have known when the 200-day is angled up, some of the best moves would have been like right here when the 513 crossed and it started to turn green. You would have been able to catch it up there. Well, the 513 has crossed to the downside and is crossing again to the downside. So short term, I wouldn't be trading this to the upside until it starts to make its momentum back up. Okay. But again, if you're looking for it as an investment, buy it 50% off. Short term, it might go down in price. Brandon said, thanks from earlier. You welcome. Germani says, what are you, what he says, what are you looking at trading on Monday, short term, 20 to 40 minutes, or however long it takes to hit your trend lines? Main goal to sort of speak. You feel me? All right. So, guys, when I'm trading, well, it depends on, you said short term, 20 to 40 minutes. So he's looking for a day trade. All right. So when I'm looking for day trades, guys, I don't know what I'm going to trade like today. If I was trading the stock market, I'm going to let the market, because you never know. Iran might send out some missiles to Iraq, or Iraq might do it vice versa. And then the market's going to change and do something different. So when I'm intraday trading, Friday doesn't determine, or Thursday doesn't determine what I'm going to do the next day. What determines what I'm going to do on that day is what I see was going on 12 o'clock midnight, right? So when I'm intraday trading, guys, the very first thing I'm going to look at is I'm going to always look at the futures market, and I'm going to look at maybe the ES. So let's say you were thinking about day trading and it was 12 o'clock in the morning. So if I was trading and it was, you know, early in the morning, I'm going to be using like a 5-minute chart, especially if I want to get in, this, that, and the other. But early this morning, and this is what's happening. This is what's happening right now. So early this morning, I'm trying to make sure this is correct. Early this morning, Thursday morning, 12 o'clock midnight, the market started to sell off in price. So my bias, in my opinion, with the 20-day moving average angle down is when I woke up at about 5 o'clock this morning or 6 o'clock this morning, I would have been thinking to short the market. Now, some of you guys, because the market's been so bullish and you've done so many classes, or your little stock group has gotten together today, a lot of you guys are like, I'm going to buy calls on Tesla because look at what the charts are doing on the day chart, and I'm going to trade them to the upside on Monday morning. So on Monday morning at 9:40, we're all going to buy calls, guys, and then you probably losing money. Why are you losing money? Because the strategy you're using does not go with what the market is doing in real time. And that's what I do to help you guys as consultants. As consultants, I try to give you guys a chance to know when to ride the momentum. If I want to trade something for an hour, yesterday don't matter what's happening within the next hour. What's happening if I want to make money in the next hour, the 2 hours prior to it probably has more effect on it than what happened 2 days ago. And a lot of you guys ain't figured that out yet, right? Depending on what time frame you want to trade on is going to determine, in my opinion, how you trade, which is why I always break down my charts into time frames. If I want to trade intraday, I'm going to trade a 5-minute chart. I see you guys flipping back and forth between 6 and 7 charts. You probably are going to lose money, because what the heck does a 7? A lot of you guys do it because it's training wheels. It's I want to feel comfortable by looking at everything else. So if everything else lines up like Voltron, Joel, if this chart is long and this chart is long and this chart is long, then I'm going to be long. And I'm like, really, the only thing that matters was the last chart you looked at that's closest to the time frame that you want to trade. Right? So it's going to take a while for you guys to do that. I don't trade but one chart for one strategy, because that keeps it simple. I can look here and know exactly what to do, where y'all are going to and from, mixing all types of strategy, which is why a lot of you guys are having a hard time making money. So, Mr. Nance, to answer your question, I would look at the futures market or the S&P 500, see what it's doing, and then whatever stock that I'm buying, if I'm going to trade a stock, I want it to be, if it's a tech stock, then I probably want to look at a tech index like the NASDAQ. If I'm trading a financial company like a bank, maybe I want to look at the Dow because the Dow is primarily made up of financial and insurance companies, right? If I want to trade the overall market, I'm going to use the ES. All right. Good question. All right. John said you confuse. Oh, thank you. Thank you so much. I confused Okta with Akla. Okay. All right. I knew I wasn't going crazy. Y'all see why I got it confused. I got Okta confused with Akla. All right. I always do that when I type it in. All right, cool. So Okta and Aklo is two different companies, which is I thought we were talking about Aklo because it's been the hot stock that everybody is talking about, but I confused it with Okta. Man, I wasn't gonna be able to sleep at night because I usually don't mess up like a stock. There's so many thousands of stocks in my head. Appreciate that. Y'all are saying the same. Well, nah, it was Okta with Aklo, but appreciate that, Kim. Yolanda says, so Netflix should be bought at about what price? Well, remember, I think it's at 1,200 right now. So Joel's not buying Netflix unless it's off 20% from its all-time highs. So I'm not gonna buy it unless it's $1,000 a share. Period. If I'm gonna invest in it. Now, if you're trading it, it's a whole different strategy. If you're trading it, you can do it now, but it depends on what your time frame is. If you're getting in and out the same day, it don't matter what price Netflix is, guys. So, like, if I wanted to day trade Netflix using this same 5-minute chart, it don't matter what price you get in because all I'm looking at is getting, if I'm trading Netflix and I wanted to make the ATR that Netflix is making. So if I looked up Netflix and I saw that its ATR was $24, right? And I'm trying to make 24, if I'm trying to make $12 off of Netflix, it don't matter what price you buy it at, right? So if I'm shorting it, or I know that Netflix moves $24 a day. So if I was day trading Netflix, it didn't matter what price I was getting it, but at 9:30 this morning, if I saw that the ES or the Qs was down, and I was like, man, I'm gonna catch the next short when Netflix starts shorting, then once Netflix broke this 20 and it started to go down in price, and I know that I can make 20 points, and it started at 1242, I already know where to get out. I'm gonna get out right around the 1220 level because that's what its ATR is. It's average true range. A lot of you guys are day trading and don't even use the ATR. And I'm like, well, how the hell are y'all trading? Like, who are you learning from? If you don't know how much it moves, how much you're gonna make? Oh, it's just faith, Joel. I just ride it until 10, 11, 10, 11 every day, and then I just get out. And I'm just like, I just shake my head because I'm like, it's only a matter of time before you lose all your money. Right? Netflix moved $24. You could have made more money if you knew that it moves $24. If you know it moves $24, why are y'all getting out? If you shorten Netflix, you know it moves $24 on average a day. So 24 minus 40, 1244 is 1220. And you getting out in the 1230s areas. You left money on the table because you ain't using ATR. Like I really don't understand how a lot of you guys are day trading. I just don't. All right. But yeah, if I was buying Netflix as an investment, I'm gonna buy it right around 1,000 area. All right, I gotta get out of here, guys. I got a tea time. I usually try to. Oh, actually, I think no. Did I get to everybody's question? I got to just about everybody's questions and concerns. So I'm coming to you guys from Decatur, where it's greater. Happy Juneteenth. And I'm out of here. If you want to do a consultation with me, to go to calendly.com/what would Joel do. Pull up my GPT, which is Ask Joel GPT. Download my app, which is the What Would Joel Do app on iOS and Android devices. And I'm out of here, guys. Good luck with everything you're doing, and I'll see you guys soon. Peace.